Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for October 20th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. A key level that we've been talking about, especially in the trading room here, is at 21.4475 right here. And that is the midpoint. It's the midpoint of the impulse range that was formed in the second week or first week here of September. We had that initial impulse move down, price bounced back to the midpoint, and ever since then, prices have settled within that range and have traded in the middle 50% of that key range. I call that a neutral extreme key range, which means that prices are clearly building energy for the next major move. Obviously, that perhaps is the election. And right here, we see that price went offered through that level, and ever since, bears have kept it offered. Meanwhile, we've had higher lows that have come in time and time again, and now we're coming up to a point here where it's kind of do or die. Are we going to break above 44.5 and rally back towards 67 to 70, or are we going to fail to see acceptance and test the outer edge yet again into 2100? So right now, that's kind of what we're looking at. I would say that bears have been defending here time and time again, but it's clear that prices have not been going down here over the recent week. So stops are vulnerable above 45s, but if price cannot get above that zone, we could be looking at a test at the extreme yet again. So right now we're at a key pivot in the charts to watch. If we take a look here at the intraday time frame, here it is. You can see as soon as price rallied up to that level, it got within one tick of it, 44.50, and got right into it within one tick and immediately offered. And so you can see right here that once price basically pushed above that previous high right here, right there, it rallied up, came within one tick, immediately dropped back down, came back, was retested right here, and boom, dropped again, and now we're below the previous session's close. So taking the previous high offered, taking the previous close offered, would be an implication that price could make its way back toward the previous session's low price, which is just above the previous week's close price. So right now we could be looking at more weakness, especially if price cannot reestablish acceptance back above 1240s, and that's been pretty difficult here lately as price has kind of chopped and tried. So right now we're looking at a little bit of weakness here. I would say pullback to VWAP could be a selling opportunity for a 5-day VPOC on a short-term basis if it happens. Otherwise, we could be hunting all the way into the mid 2120s in the ES by the end of the session. All right, let's take a look at crude oil. Here's crude, the higher time frame crude oil chart. This one is also at an important inflection point in the chart. Something I haven't really done in this pre-market view is something higher time frame, which is looking at the higher time frame look at this chart. One thing about this chart in the very, very highest time frame, which is a weekly time frame right now, is 52s. 52s has been very, very important. You can see the last time we were at or above that level was July of 2015. Ever since, we've been completely below it until yesterday, where we peaked just above 52s, hitting 52.22, and then rejecting by the end of the day. So it's clear we have formed a very, very clear, strong resistance level, and prices are coiling up toward that apex, and it's due here. We either break through 52 and rally towards 62, the recent high, or we fail to hold above 52s and rotate back toward value, which is about 46.69 right now. So, or 47.98 in terms of this higher time frame view. So right now we have something to consider here on the highest time frame. So that's the 52 level right there. See it? Price went above it, rejected. Here's the previous week's high, rejecting. So right now we're seeing a little bit of weakness in crude oil. Again, if price cannot establish acceptance above 52s, we could be looking at a move all the way back into composite value, somewhere between 46 and 47. So it could be quite a pullback. That doesn't mean we won't eventually break through 52s, because we certainly could after the pullback. But right now, this is an important area in the chart, and the first test was rejected. All right, let's take a look at the intraday time frame. Here's the intraday. You can see so far today, after prices rallied, here's 52 again. It rallied above, tried to hold, failed, and then boom, failed again right here. That was the last ditch effort late in the day, eventually dropped back toward value, and then today tried to hold above the previous session's close price, that white dotted line, and then offered back to the previous low. So this is what we're talking about in the ES. If you take the previous close offered, you're likely going to go back toward the low, and that's where we're at. So right now, this could be an opportunity for bulls to step in off the previous low and squeeze back to value, perhaps back to the close. Otherwise, we have further downside expansion targets that could be reached today back into 5-day VPOC, which is 50.38, and perhaps even lower. So right now, if there's any failure to hold above these 51s, we could be looking at more weakness in the 50.38 by the end of the session. All right, let's take a look at gold futures. Here's gold trading range on an intraday basis. If we flip out to the higher time frame here, you'll see that prices pushed above our key level here, which was 1268. 1268 was the important level to break through. I've been mentioning it time and time again. As soon as we break out from this range, you have to get acceptance above 68s. If so, we could be looking at a move back toward 1280, 1290, and then the 1306 zone. So it could be a nice recovery. At the moment, you can see after the breakout that we saw the previous session, so far the previous week's high right here is becoming support, and we have a little bit of an inside day. So if this thing were to break above 1275, it could be clear air back toward 1290, and then 1290, 190 would be the 100% expansion of this key range. So 1290 to 9190 is the zone to watch if this thing can continue to hold above 1268. All right, let's take a look here at the NQ. Here's the NQ in the higher time frame. Very similar to the ES, it's testing the key level from below. You can see this 48.40 has been very important to us, resistance time and time again. Then price tried to hold above it but failed on the new high and dropped back below it. And now retests at 48.40 have been defended by bears. The problem is they're not getting paid just yet. You see higher lows, higher lows, higher lows. So the stops become at risk above 48.60, the recent highs, and especially if this thing can establish acceptance above 48.40. So 48.40 continues to be a key level. If price cannot find acceptance above 48.40, we could be looking at a retest of these lows very soon. Otherwise, above 48.40, retest the highs at 4900. So we're at a very important inflection point still, and continue to watch 48.40 as we head into the election day. Now, if we take a look here at the intraday, very quickly, again, I always like to look to see how price responds to the outer edges of the previous session's range, and so far price is above 48.40 quarter, which is the previous session's high, offered above there, and now price is being offered below the close. So that's very important here. This is going to be a key level here, 48.30, and failure to hold above that level would point the way down to the previous session's low price, and that's 48.10. So again, if you can't hold above the high, you go to the close. If you can't hold above the close, you go to the low. So we could be looking at movement back toward 48.10, and perhaps as low as the next HVN below, which is 48.02. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.